Welcome. Today we're exploring best books for raising venture capital funding. This guide is about one thing: helping you pitch better, negotiate smarter, and partner with the right investors. Venture capital can accelerate a company or quietly complicate it for years. The difference usually comes down to preparation and perspective. That's what these books offer. If you want to go deeper, revisit ideas, and work through guided exercises, you can download the full PDF guide linked in the description. It's designed to complement what you're about to hear. Let's start with the roadmap. In this video, we'll move through 3 phases. First, why venture capital matters and why books are such a powerful learning tool. Then we'll break down 5 essential VC books, each one offering a different lens on fundraising. Finally, we'll translate those insights into action, reflection, and next steps. The promise is simple: 5 books leading to clarity and then to action. Why does this topic matter so much? Raising venture capital doesn't just fund growth. It shapes ownership, control, incentives, and long-term outcomes. Early decisions, sometimes made under pressure, can echo for years. A single clause in a term sheet can affect how much freedom you have as a founder, how motivated your team stays, and how future investors perceive your company. Missteps early on aren't always obvious at the time. They show up later when leverage is gone. That's why understanding the process before you're in the room matters. Let's set the foundation. So, why focus on books instead of short articles or quick videos? Books force structured thinking. They slow you down enough to see the system, not just the surface. Instead of isolated tips, you get frameworks, ways of thinking that scale as your startup scales. You can return to them at different funding rounds and extract new meaning each time. Short content is helpful for awareness. Books are what build judgment. This is where depth begins. Now let's move into the core of the guide, the 5 books. First up is Venture Deals by Brad Feld and Jason Mendelson. It carries an average Amazon rating of 4.8 and was published in 2019. The value proposition here is straightforward: understand term sheets before they understand you. This book teaches that economics and control define every deal. Price matters, but terms often matter more. Liquidation preferences, board composition, voting rights, these details shape power long after the round closes. Second, it frames term sheets as blueprints for long-term relationships. They aren't just legal documents. They encode expectations, incentives, and future behavior between founders and investors. Third, it emphasizes that dilution compounds. Giving up too much too early doesn't just reduce ownership, it can affect motivation, hiring, and future fundraising. One quote captures the spirit of the book: "Term sheets are blueprints for relationships." If you're raising capital or expect to soon, this book helps you read the fine print with clarity. Grab the book here. The link is in the description. Reflection matters here. As you listen, consider: how do economics and control show up in your current or expected term sheet? Where might small concessions today create large consequences later? Take time to journal on that. Next, notice how power dynamics shift as we move to the second book. The second book is Secrets of Sand Hill Road by Scott Kupor. It holds a 4.6 rating and was published in 2019. This book opens a window into how venture capitalists actually think behind closed doors. Its first key insight is that storytelling drives conviction. Data matters, but narrative is what makes it stick. Investors want to understand not just what you're building, but why this problem matters now and why you are the right person to solve it. Second is the now famous idea that aspirin beats vitamins. Products that relieve acute pain attract capital more easily than those offering incremental improvement. Third, founder market fit matters deeply. Investors look at your background, timing, and insight into the problem as signals of inevitability. Kupor summarizes this with a sharp line: VCs fund painkillers, not supplements. This book is especially helpful if you've ever wondered why technically strong startups sometimes struggle to raise. Grab the book here, link in the description. As a reflection, ask yourself: does your pitch clearly communicate pain? And does it explain why you are uniquely positioned to solve it? Write that out. Don't rush it. This reframes the pitch entirely. The third book is The Business of Venture Capital by Mahendra Ramsinghani. It has a 4.7 rating and was published in 2021. This book zooms out. It shows the full VC ecosystem from fund formation to exits. One key insight is that milestones unlock capital. Progress, not promises, is what reduces perceived risk. Second, boards can either create leverage or friction. The right board adds strategy, access, and discipline. The wrong one slows everything down. Third, exits are buyer-driven. Companies aren't sold because founders want liquidity. They're bought because buyers see strategic value. A defining quote from the book is, "Companies are always bought, never sold." This perspective helps founders understand where they fit in a much larger system. Grab the book here, link in the description. For reflection, consider how clearly your milestones signal progress, and ask how your board or future board could add value beyond capital. Now let's zoom back into execution. The fourth book is Raising Venture Capital for the Serious Entrepreneur by Dermot Berkery. It holds a 4.2 rating and was published in 2007. Despite its age, the core ideas remain relevant. Its value proposition is turning fundraising into a deliberate, staged process. First, financing maps reduce surprises. Knowing when, why, and how much you plan to raise gives you control. Second, cash burn defines leverage. The faster you burn, the weaker your negotiating position becomes. Third, milestones signal credibility. Each round should prove something specific to the next set of investors. Berkery captures this idea with the line, "Structure milestones to earn the next round." This book is practical and grounding. Grab the book here. The link is below. Reflect here. Are your milestones clearly tied to investor proof points? Write them down. Make them explicit. Discipline changes outcomes. The fifth and final book is Mastering the VC Game by Jeffrey Bussgang. It has a 4.4 rating and was published in 2011. This book focuses on partnerships, not just capital events. First, relationships outperform transactions. The best outcomes come from alignment, not optimization. Second, failing fast helps you learn faster. Speed of learning often matters more than avoiding mistakes. Third, founders should choose investors, not just checks. Who sits on your cap table shapes your journey. A memorable quote from the book is, "Fail quick and cheap." This book brings a human lens to venture capital. Grab the book here, link in the description. As a reflection, ask, which investor relationships would actually make your company stronger? Journal honestly about that. This is about alignment. Now let's step back and look at what all 5 books share. Across them, several themes repeat. Capital follows clarity. Investors respond to founders who understand their own business deeply. Relationships compound returns over time. Milestones consistently beat optimism. And alignment between founders, investors, and incentives matters more than valuation alone. Different voices, same signal. So how do you apply this? Start with actionable takeaways. Audit your current term sheet assumptions. Rewrite your pitch as a pain story, not a feature list. Define milestones before you raise, not after. Here's how to apply what you've learned. Next, focus on implementation. Map investor fit instead of chasing check size. Prepare for diligence early. It always comes sooner than expected. And revisit these books at each round. Their meaning changes as your leverage changes. Now comes the challenge. Take time to reflect on 3 questions. What leverage do you truly have today? Which incentives are misaligned, and what single milestone changes everything? Don't just think about these, write them down. Complete these reflections with guided space in the PDF workbook linked in the description. Who are these books for? They're for first-time founders learning the rules, for experienced CEOs negotiating power, and for aspiring VCs who want to understand how the engine works from the inside. Different stages, shared fundamentals. Let's close with the big idea. Fundraising is not persuasion, it's alignment. When incentives line up, deals feel smooth. When they don't, friction shows up later. These books help you recognize the difference early. If you want to revisit these insights, track your progress, and apply each lesson step by step, download the full PDF guide linked below. I'll leave you with this final thought. The best deals feel inevitable in hindsight. Thanks for watching.